Hey everyone, welcome back to Corporate Decoder. Today BAYAR just filed an 8K about a Nasdaq listing decision, and I'm seeing a serious condition that could cause trouble. Quick note, this is not financial advice, just my take on public filings for educational purposes. The company got a conditional green light to stay listed, but the deadline to merge with another company is tight. Bayview Acquisition Corp, or BAYAR as it is known by its stock ticker, has been navigating some choppy waters with Nasdaq, the big stock exchange. It has been a bit of a nail biter, but they've managed to get a second chance to keep their shares trading on the exchange. This filing, a Form 8K, is basically a way for companies to tell the public about important events that happen between their regular financial reports. Think of it as a news alert from the company to investors. The main story here is about Bayview's listing on Nasdaq. They got a notice that their securities might be taken off the exchange. This is serious because being delisted means it becomes much harder for investors to buy and sell the stock, which usually tanks the price. Now, the good news is a Nasdaq hearings panel looked at their situation and decided to let them stay listed, but it comes with some major strings attached, and these conditions are super important to understand. First, they had to move their stock to a different part of Nasdaq called the Nasdaq Capital Market. This happened really fast by the 24th of April. Think of it like moving from a premium lane to a standard lane on the highway. It is still on the same highway, but it is a slightly different environment. This second condition is the really big one, the one that puts a huge amount of pressure on the company. By the 19th of June of 2026, they absolutely have to complete their business combination, which means merging with another company called Oabay Inc. Not only do they have to merge, but they also have to prove they meet Nasdaq's initial listing rules right after the merger. This is a very tight deadline. So as expected, they moved to the capital market on the 24th of April. The report mentions that this transfer itself shouldn't really change how the stock trades. The symbols BAYAR, BAYAR for units, and BAYAR for rights should remain the same. This is the crucial part where the company itself admits there are no guarantees. They are saying, look, we really hope to meet these deadlines, but there is a real chance we might not. This is the kind of language you see when a company is walking a very thin line. What makes this situation particularly dicey is the short time frame to complete the merger with Oabay. For companies like this, especially special purpose acquisition companies or SPACs, merging with another business is their whole reason for existence. If they fail to merge, they often end up liquidating and returning whatever cash is left to shareholders. This deadline of the 19th of June is incredibly close, and business combinations can be complex and prone to delays. We saw similar situations with companies that struggled to merge before their SPAC deadlines, and it often led to significant stock price drops or delisting. Think of historical SPACs that failed to find a suitable merger target within their timeframe. Many saw their stock price plummet by 70 to 90% in the months following their deadline expiry. A hypothetical $1,000 investment in such a situation could have quickly become just $100 to $300. Following up on this Nasdaq news, the company also put out a press release. This is standard practice to make sure all investors get the same information at the same time, avoiding any unfair advantages. And as with most public company announcements, they've included what are called forward-looking statements. This is basically legally saying that their future predictions might not come true because of various risks and uncertainties. They are covering themselves by saying that things like achieving their merger goals and staying compliant with Nasdaq rules are not guaranteed. The big takeaway here is the pressure Bayview Acquisition Corp is under. They get to stay listed for now, but only if they can successfully close their merger with Oabay very soon. The market will be watching closely to see if they can pull it off by the 19th of June deadline. Failing to do so likely means a very difficult road ahead, potentially including delisting. That is my take. Stay decoded. If you want the tools I use for research, they are linked in the description. Like this video and subscribe if you want more deep dives.